kind of bring up the screen again. Here's where we have your initial entry, right? So I want traders to just focus on, I'm not going to speak about any of the numbers. I'm only going to speak about the delta. You only need to read a few numbers. So why does the market move up? Triple X, where, what, why. The final step to understand here is the why. And so this can save you a lot of losses as well if you simply knew which break and retest was going to work. So can you see here, there's a ton of red delta. You can see red, red, red. There's a lot of red sitting over here, a lot of red here. And this candle here is the most interesting. We saw essentially the entry. So we saw a break and a retest. So you want to enter upon a successful retest. So this was your successful retest. What was happening over here? So I'm just going to enlarge in this as well so we can really focus on this price action, because this is what I want every trader to understand. So when you see price coming into a key level, this blue box, right, you're seeing here 66 for 0 and you're seeing 140 for 60, right, the bottom of this candle before you see the market breaking to the upside. So it shows you here the aggressive sellers have failed to reclaim the level. It shows you aggressive sellers have failed at this key level, at this fair value gap. So what does that tell you about the price action here? Should you be buying or selling? If all the aggressive sellers fail, what does that tell you about the buyers, right? Even here as well, you saw this wick over here. This wick here, what's super interesting is this wick here, 249 for 64, 29 for 0. Now there's two things you want to understand from here. Firstly, you see red delta right at the POI, right at the key level, right? That means that there's a ton of aggressive sellers and none of them get rewarded. Because if they were rewarded, you wouldn't have had this massive, great big whopping candle where my second entry was just over here. The reason why the markets moved up is because the aggressive sellers failed. Now, what's interesting here is you see 29 for 0. So the 29 for 0 means that the auction has been wiped out. So when you see a 0 on one side, when you see a low and a high in the movement, that's telling you that the sellers, that there's no aggressive buyers, that there's only aggressive sellers. So it shows you here, there's passive buyers that are absorbing these sell market orders, and that's what drove price higher. So that there was essentially the long position that I took, roughly from this area, so stop loss below the zone, and you're just looking to target the next zone over here, right? So this was roughly whatever it was, a 2.2R trade, whatever it was, right? So now, one last thing I want to finish on. So even though the markets was kind of choppy, what you want to focus on here is this deep retracement, which I did panic a little bit when I saw this. I was willing to stop out roughly here at roughly minus 0.7R. But again, why did